Welcome back to the daily Bitcoin and cryptocurrency news channel. Today, we're diving into the latest movements in the Bitcoin market. The top cryptocurrency by market value, Bitcoin, continues to lose ground. This comes in the wake of CoinDesks' Bitcoin trend indicator shedding its bullish bias for the first time in 3 weeks. As of the time of this recording, Bitcoin had fallen to $26,160. This marks the lowest value for Bitcoin since March 17, according to CoinDesk data. Over the past week, we've seen prices declining by over 12% since May 6. This marks a significant decoupling from the uptick in traditional risk assets like the Nasdaq. Interestingly, the BTI indicator, which measures the directional momentum and strength in Bitcoin's price, flipped from bullish to neutral this Thursday. Now, this indicator has consistently signaled an uptrend since January 13. However, it did show a brief red flash signaling a downtrend in mid-March and a neutral reading on April 24. According to Matthew Dibb, the chief investment officer at Astronaut Capital, the current decline seems to have been influenced by low liquidity. This low liquidity seems to have allowed a few sellers to drive prices lower. Dibb was quoted as saying, "There seems to be paper-thin liquidity right now, even across majors such as BTC. While we can't point at a direct reason for the weakness, any medium to large offers are driving the market down. This decline in liquidity, or market depth, on major exchanges, including Binance, has made it difficult for traders to execute large orders without influencing prices." Let's turn our attention now to Dick Lowe, the founder and CEO of quant-driven crypto trading firm TDX Strategies. He suggested that the downside move may gather pace if traditional risk assets turn lower. Lowe told CoinDesk, "We could get an acceleration on the downside if U.S. equities also start to roll over. $25,200 is key support for BTC, followed by $23,100 on potential downside acceleration." However, he added that the bearish bias would be invalidated if prices rise above $28,500. As we flagged for you last week, Bitcoin's drop to 2-month lows has confirmed a head and shoulders bearish reversal pattern on technical charts. This breakdown has opened doors for a potentially deeper slide toward support around $25,000. Before we wrap up, let's take a step back and put this in perspective. Bitcoin's price, while currently experiencing a slump, is a reflection of various complex factors at play. Market depth and liquidity, trends in traditional risk assets, and the overall economic climate all contribute to these price movements. One particularly interesting element we've observed is the thin liquidity across major cryptocurrencies, including Bitcoin. According to Matthew Dibb from Astronaut Capital, the current state of liquidity appears paper-thin. This means that even medium to large offers are significantly influencing the market, driving prices down. This situation has been worsened as liquidity on major exchanges like Binance has recently deteriorated. It's now harder for traders to execute large orders without having a noticeable impact on prices. This is a key factor to keep in mind if you're currently trading or planning to trade in the near future. Now, what does the future hold? It's always hard to tell, but some experts have given their predictions. Dick Lowe, CEO of TDX Strategies, has suggested that we may see an acceleration of the downside if traditional risk assets, like U.S. equities, also start to roll over. As per Lowe, Bitcoin's key support lies at $25,200, followed by $23,100 in case of a potential downside acceleration. However, a rise above $28,500 would invalidate this bearish bias. Technical charts seem to agree with this prediction. The drop in Bitcoin's price to 2-month lows has confirmed a bearish reversal pattern, suggesting a potential for a further slide. However, as always, it's essential to remember that the market is volatile and subject to rapid changes. Market predictions are just that, predictions, and the actual developments may deviate significantly. It's also important to remember that investing in cryptocurrencies should be part of a diversified portfolio and that it's crucial to do your own research before making any investment decisions. That's it for today's episode. We hope this information has been helpful in understanding the current Bitcoin market dynamics. As always, our goal is to keep you informed and prepared in this fast-paced world of cryptocurrency. Remember, If you want to stay up to date with the latest news and analysis, don't forget to subscribe to the daily Bitcoin and cryptocurrency news channel and hit the bell icon to receive notifications. We'll continue to monitor the situation and bring you the latest updates in our next video. Stay tuned, stay safe, and happy investing. Until next time.